Fantastic. All right. Then there's no reason not to get started. Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders as discussed and tracked. All securities, see if I do it slowly, I mess it up. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar website or promotional material constitutes promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options. And we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone. Whoa, fantastic. All right, I really got to pay someone to make a tape of that or something. Anyhow, where are we? Nobody has any special questions to start, so let's just look at what's going on. Futures, let's look at this futures. In the hourlies, as you can see, we kind of, we tested some lows here. This is big money for us. We hit just over 400 here. We were shorting from 5, so that's a nice 500-point move. It's $500 on the futures contracts. This one was down from, it was 42.50 where we were shorting, and we came down from 42.50 to 30. Is 12.50 times 50 is what, like $600 or something like that. This one we shorted from 35, I believe, and we got down to 44, so that's 35. It's like $700 a contract on that one. And this one was beautiful. We came from 91 down to, well, 91 to 81 is $1,000 already. So somewhere around $1,000 per contract on that little Russell dip. The Russell is always the most exciting one to play. It really is. Now, we have good bounces here. We have from 400, we have from 30, we have from 400, which is a really good holding line for the Nasdaq. Just because it failed it still clawed right back over it, so that's okay. By the way, it's an hourly chart. You could look at the 5-minute chart and go, oh my God, what happened, blah, blah, blah. Don't look at the 5-minute chart. What happened in the medium term? Okay, mostly I look at, my day trading charts are 10-minute charts. That's when I'm day trading, I look at 10-minute charts. I never look at minute charts or 5-minute charts. I mean, they don't tell you anything. There's no chance that any kind of a real trend can assert itself in 5 minutes. It just doesn't happen. Now, the DAX held its 10,000 line, so that's still pretty bullish. Okay, we're not in very bad shape yet. The Nikkei held up over here. Oh, that was another one that made some money. I think we went from 17 to 16.9. That's another $500 there. This is like 500, 500, 500, 700, 1,000. That's basically how the money went this morning. Not bad. So, whichever one you play from my morning post, and in case you guys, if you didn't read my morning post, I don't even know why you're here, though. So in the morning post, we summarized them somewhere. Oh, there it is. See, these are all our shorting lines from the morning post, and they were easy because we actually went up a little bit and then we fell, so it worked out very well. See if anyone has no conversation really. Is anyone actually there? You guys. All right. That means I got like think of things to say, which is, the hard work. All right. So actually, I do have some things to say, but let's take a look at yesterday's post for one thing. So we're going to go to yesterday's post. I had something very important to talk about there. Sometimes I remember chat room, we hit these topics that are generally important. Let's see. Nope, not the fact that I went back to sleep. Wait, what did we talk about? I know there's something I was very interested in discussing. Not that. Not voter suppression. Check out this guy, though. This guy was at the finish line of the Boston Marathon, and he got bombed. He was in Paris, and he got bombed. And now he's in Brussels, and he actually got injured at the airport. I mean, that is really, really bad luck. And I say to people this morning, I'm like, stay away from this guy. Make friends with this guy. Find out where he's going, and don't go there, because that's the worst luck I've ever heard of. I mean, to the point where he would almost be a suspect, I think, if he wasn't like a really good Mormon guy. Let's see. All right, so early this morning at 1:49, this is when we talk about 24-hour member chat. This is 1:49 in the morning. We're having this discussion. So oil, we were looking at oil was holding up, and I said, how do we stay over 40 with this much oil sloshing around? And now oil is right about at the 40 line. So we're right at 40. But our prediction this morning at 2 a.m., when it was still over 41, we were looking for it to go down to 40. Gasoline we knew was stretched, that came down, whatever. Okay, so see these charts update. So the chart you see here isn't the chart from 2 a.m., it's the chart current. So here, here's our session opening today. 2 a.m. was like over here at 40, 41. IBM. That's what I want to talk about. Value. Yes, I love talking about value. So not only going to talk about value, we'll talk about why. So Coke had asked me about what was the actual comment? Let's see if I can find it. Sorry. Oh, here. Would you please give me a short-term option trade on IBM? I want to see quick results. Okay. Yeah, we do have a chat room. People do ask questions, but so my first answer to him was, I think, a short one. IBM Coke. I can't give you a trade idea on IBM, especially short-term, as it's back near $150, and we only liked it because it was $130. Long-term, I still like them, but at $150 in the short term, it could go either way, especially as we're still expecting a general market pullback one day. Being, we say one day, but we haven't had it. We keep thinking it's going to happen. Now, so then in retrospect, as I talked to some other people, I decided to elaborate on what he said, on what I said to him. I think it was because of his response, whatever it was. So he responded, said thanks and whatever, and I think I wanted to clarify. So I said, look, and this is for everybody. It's really important. It's true about everything we trade. So I'm saying here, IBM Coke. I guess I don't emphasize it enough, but step one in finding a stock is finding a stock that is particularly over or undervalued, I should say, and then finding an options play. And that's what we work at. We wait patiently for a stock to show a channel to it and then be at the bottom or top of a channel that we can trade. So when we started liking IBM, I think I go into this, so I'll just read what it says. So, the reason my morning posts do so well is because they're based on macro fundamentals. Nobody's asking me about a random stock. That's me picking the stock. When it's in the morning post, or when I just come up with a stock and nobody's asking me about it, and I put it as a trade idea or something like that, those have a really, really high percentage of coming in well. And one of the reasons for that is because it's usually based on a macro trend that I've identified. Like something is happening, And I think that there's a very, very high probability that a certain stock will go a certain way based on things I see happening in the news and such in the overall picture. So, when people just ask me, I know it seems that's the thing. So he has the impression, and I guess a lot of people do. They have the impression that like I can make a great trade out of any stock, but that's not true at all. Okay, the secret to my success is the fact that I don't make trades on most things. That I really, honestly, even though it seems like a lot of stocks, I'm looking at thousands of stocks, and I'll find 10 trades in a week, 20 trades in a week that I like. And of those, even, I'd say half of them come up from discussions. And not that it's bad to have the discussions. I'm just saying that sometimes, I'll pick something from a discussion. Someone will say, oh, what do you think of Apple? I'll be, oh, here's a good Apple trade. Boom. It's not like I was picking Apple for a particular reason. It's just that somebody said, here's Apple, and it wasn't so bad, so I reiterated a trade on it. But that's not the same as the ones that I really feature and talk about, okay? But those are few and far between by comparison. And they have an incredibly high success rate because I'm not just picking an option off a stock I like. I'm waiting months for the stock to be my price. And now we go back to the thing which, one day hopefully we'll have a robot that can archive these seminars, but you can probably, so you can like look for Levi's example in all the seminars. But I talk about it all the time, and it's just because it's the simplest way I know to explain it. So I'll do it again. But, the way it works is I know for a fact, a pair of Levi's cost $50. Right? That's a fact. They always cost $50. That's what it says on the label. Every retail store you go to is $50. That's the price of a pair of Levi's. So I know that. I understand what Levi's are. They're jeans. I know what they do. They go on my body. They protect my legs from being cut or whatever, or from looking white. I don't know. Honestly, I prefer shorts myself, but that's beside the point. But anyway, so when but anyway, so I know what the jeans are for. I know what they do. I know what I'm going to use them for. I know what kind of value I'm going to get out of them. Right? So I'm very familiar with this product. So when it's $50, though, I also know I shouldn't buy it because they're often on sale for $40. 20% off is nothing, so you get them for 20% off all the time. So why would I buy them for $50? Okay, they're always going to be there. So why would I be the idiot that pays $50 when I know they're going to be $40 at some point? I don't need the Levi's. I got money in my pocket. I could buy the Levi's if I want to at any time. All right? But I don't need them, so I don't buy them unless they're cheap. And even when they're $40, I still don't need them because I have like 3 or 4 pair of Levi's in my closet, okay? Like one's got holes in it, and it's my favorite pair, and one's, but I can't wear them everywhere. And, and one is a blue pair, and one is a black pair, whatever. So when another pair goes on sale, unless there's like one of them is in imminent need of replacement, I don't need another pair. But on the other hand, though, if I go and see them on sale for $30, I'll buy a pair because I go, $30, that's really cheap. And I know I'm going to need them eventually. Even if it's a year from now, I'll buy a new pair, put it in the closet, and eventually get around to wearing it. All right? Or I'll pick a different color that I don't have or something like that. It's only $30. And I know I'm getting a great deal. These are the kind of decisions that we make every day in life. Yet, for some reason, when you get to the stock market, you don't make decisions the same way anymore. It doesn't make any sense. Okay? When something has a value, when you buy things you understand and you know what the price should be and what the value of it is, then you don't have to sit there and wonder whether or not it's a good time to buy or not. And you also don't have to wonder if it's a good time to sell. If somebody's going around offering $60 for Levi's, I'm going to sell them my Levi's. I'll go to my closet, I'll sell them all 3 pair. Maybe it'll be $75 for my vintage ones that have the holes in them. So that's a no-brainer because I know that maybe for whatever reason Levi's are $60 today, but you know what? They'll come back to $50 and they'll come back to $40. All right, it's temporary, unless something very, very drastically changed in the Levi world. You know, and that's true. If it's going to 60 all of a sudden, I might want to look up and find out why there's 60 and why is people buying up Levi's suddenly on some spree. But if the reason is because Britney Spears just did a Levi commercial and all of a sudden everybody's buying them again, they got more expensive. I'm like, that won't pass. That won't last. There's no fundamental reason it jumps from 50 to 60, just like there's no real fundamental reason it goes from 50 to 40, except that the stores, the retail stores, have their seasonal cycles and so on and so forth. You know, but you know, randomly they go on sale. Randomly they go back to retail price, okay? That's called a trading range. If you know it and you understand it, you can take advantage of it. And it goes with stocks, too. I keep talking about the jeans because jeans are just so simple, it's hard to imagine anything else. But you know, when I look at these stocks, they're just, you know, I mean, I don't trade stocks generally if they're not as simple as Levi's to me. If I don't understand the company 100% and know what they're doing, and I know how they make money and why they make money and what's going on with them. You should know as much about a stock as you do about a pair of jeans, which is like basically everything you need to know. I don't need to know about the dye. I don't need to know about the cotton or whatever, the fibers. But unless I find out cotton got really expensive and that's why the jeans are $60. And I go, okay, that's a fact. I need to know that. But generally, I just need to know the basics to understand it well enough to say, okay, I know what it's worth. And that's the danger of following pundits on TV or wherever, when they just randomly name a stock you've never heard of and you jump in because he tells you a good story. It's crazy. Same thing with lists. I don't care how good you think your screens are. If they pick up a company that you don't know in a sector you don't understand, why on earth would you buy it? It's a terrible idea. Okay, once you buy it, you own it. You are the one that needs to understand how it works, not the person who recommended it. You've got to be comfortable with it, and you've got to know what to do in your portfolio. Anyway, so, and by the way, and when the Levi's go on sale for $30, okay? When they drop to $30, I don't go, ooh, I don't like Levi's, they're $30. Why would I buy them? They were $40 last week, now they're $30. Ew, I don't want it. No, that's ridiculous, right? And why is it ridiculous? Because I know what they're worth. I know I want a pair. And if they go to 25 or 20 next week, I'm not going to feel like an idiot because I got my Levi's for 30. I'm happy I got a pair of Levi's. I got a pair of pairs I like for prices less than I usually pay. Same thing with stocks. Why do you change your mind about a stock when it gets cheaper? And why do you change your mind about a stock when it gets more expensive? What the hell does that have to do with the value of the stock? Price is not value. Okay, I'm sure you guys, because most of you are pretty sophisticated in stocks and whatever, I'm sure you guys all the time have conversations with people who will tell you, Intel is way cheaper than Apple. It's only $25 and Apple's $100. And you're like, well, that's not the same thing at all. Because it depends how many shares there are and what the total market cap of the company is and blah, blah, blah. You know, it's not way cheaper. They have about the same PE ratio. In fact, Apple has a lower PE ratio than Intel, even though Apple has a much higher stock price. The price has nothing to do with the value of the stock. You know this. Okay, you know it, but you don't know it because you know it, but you don't capital know it. You know, that's why I keep capitalizing. No, you need to know it like this is an absolute fact of life. Like water boils at 212 degrees. That's a fact. That's the value at which water boils. There's not really much variation to that. Okay, water boils at 212. IBM is worth at least $130 a share. Those are absolutes, okay? And I'm as sure about IBM being worth $130 as I am about water boiling at 212. That's why I like to buy it when it's cheap. Okay, same thing with Apple. When Apple is below $100, when Apple is $90, it's time to buy it. Apple is worth at least $90. I don't care what kind of scenario you want to throw at it, it's worth $90. So when it went down to 90 bucks, we were boom, 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 buy, buy, buy. And when it goes to 120, we sell. Because you know what? It's still worth it. I think it's worth 120 in the longer run. But right now, when it goes from 90 to 120, take the damn money. That goes too. It goes both ways. When it's too expensive, when your stock is higher than its value, it's time to sell and find something else that's good value. All right. So anyway, it's easy to understand because you understand Levi's. Why is it hard to understand this with stocks? IBM was going to be our trade of the year in November. We were going to make IBM our trade of the year. It was at 130. Where's November? Here. So I was excited to make IBM our trade of the year, and this is the time of year when we start looking at stocks to think about our trade of the year for next year. And it was coming down and down and down, hitting 130. I predicted it would hit 130, and it hit 130 and bounced. So I was really excited, but unfortunately, I wasn't going on TV until like December. So I couldn't make my official trade of the year pick until December. So what happened between November and December is they went back to like 140. While that was happening, though, my runner-up for trade of the year was natural gas, and in November it was at 10, or it fell to 9. On the whole, though, I liked IBM to go back up more than I liked natural gas to go back up. So we kept watching it. But then what happened is in December, natural gas fell to 7, and that was my line for natural gas. But IBM was up at 140, which is over my line. So given the choice of the two, and given the premiums on the options that were available at the time, I switched my trade of the year from IBM to natural gas. Now, it was a good thing, too, because IBM actually IBM had a worse fall than natural gas. IBM dropped 20 bucks. Well, no, actually, they're roughly the same. But IBM fell off 20 bucks from there and hit 120. Then there I started pounding the table again. I changed my mind and told people, oh, no, now this would be my trade of the year at 120. So internally we changed our mind and said, well, we love IBM. But we didn't get off natural gas. As natural gas got cheaper, we just kept buying it down here. And we have a huge position in natural gas now. So here's me, 1027. When we first started, now 1027 on IBM is up here. So when IBM was first breaking 140, I said it's still my leading candidate for stock of the year. So but way back on October 27th, we were looking at stocks to think about what we do. At the time, my play was this: go sell the 125 puts, because like I said, I think 130 is the absolute value of IBM. Doesn't mean it can't go below it. Doesn't mean a bunch of idiots can't sell IBM for too cheap. I don't care what they do. Not only that, though, but we're selling the 125 puts for $8. Okay, so we're netting in for 117. We're netting in well below what I consider the safety line at 120. And in fact, actually, 117 was pretty much exactly the low. So in October, we sold puts that said 117 as our drop dead low, and there it is, right there. Then we buy the 125, 150 bull call spread. All right? The net on this trade is $2,500 cash. Our obligation is to own 2,000 shares of IBM at 126.25 net. Okay, because even though we sold the 125 puts, the cash divided by 20 is 125. So our net is 126.25. That's a $252,000 commitment. This isn't a baby thing. This is written up for our premium members and institutional investors. So 126,000 in the ordinary margin, but you know, the thing is, this is really for people with portfolio margin. But even if you have regular margin, as long as you have enough money in your account, why not, right? Because it's a hell of a trade. But if you have portfolio margin, you're going to pay the margin effect on this thing is like $60,000. It's a really great trade. And the upside of 150 is $47,500. So your net margin. Oh yeah, here you go. The net margin for the 125 puts was just $25,000. So it's a great margin efficient play for people who have a portfolio margin account. Anyhow, So it's a great play. It pays incredibly well on cash. From 2,500, you make a profit of 47,500. And your worst case scenario. See, here's the thing: if you have millions of dollars in a portfolio, you don't care if you get assigned 20 IBMs. It doesn't matter. But even if you have a $2 million portfolio, $45,000 in a $2 million portfolio is still 5%. No, wait, sorry. $200,000, 50,000. Yes, 2.5%. Sorry. So even if you have a huge portfolio, you're still adding a nice chunk to your portfolio with basically no margin at all. So it doesn't even affect you. The only time it affects you is if it actually does drop down and you have to buy it. In which case you're like, so what? I own IBM cheaply. That's fine. All right, in our long-term portfolio, we already sold the 105 puts when it was down, so we already had a trade here. And I said the idea of our trade of the year is a trade that I feel is most likely to return 500% on cash over 12 months. Even though we don't get the full 50,000 until June 2018, you only need to be on track to make 15 or 20,000 in 2017, and that's more. Now this trade is already well ahead. This trade's already returned 25,000 bucks. So you got a 10x return on 2,500 bucks already, and it's halfway to its goal. All right, but nonetheless, I just said don't buy IBM because 150. I'm like, it's gone ahead of itself now. And then we talked about how we switched to UNG. All right, so the point is, we were watching this thing for months, waiting for a good entry. We didn't pull the trigger. In fact, we decided against it when it bounced up 130 too fast for us to get in. We had a small position, but we didn't pull the trigger on a bigger position until it fell down even lower than we thought. But when it went on sale for this ridiculous price, just like those $30 Levi's, we didn't say, "Ooh, we don't like IBM anymore because it got cheap." We said, "Ooh, let's double down. This is super cheap, and we'll find someone who wants to buy them for more money than 120 down the road." Same thing for natural gas. When natural gas got cheap, we bought much more. Because we know the value of something. And we're not distracted by price. And here's one thing there. I know I like IBM at 130. I know I like UNG at 6. Okay? So when IBM is at 150, despite the fact that I like them, I don't buy it. And when UNG is at 6, despite the fact that it's below 7, I don't panic because I know it's worth 9. And I just have to wait for the sale to be over. All right, so let's see if anyone has questions. Well, now we've got lots of questions. Let's see what's happening. Oh, yeah, I wasn't even looking at that stuff. What are we, bouncing again? No. Come on, let's take down. All right, nothing exciting. I mean, see how things hold up, and we'll take a look in a while. I'm not in the mood to do the futures right now. So we get into the futures, we're not talking anymore. Was the last hour's pullback enough to decide to get out of a short ES, or should we continue to hold for more downside? No. That's a good question. All right, that we talked about also in chat this morning. I already called that out. When we were down here, I said, what time was it? In the interest of full disclosure, I'd like to find out exactly when I did say something. All right, not there. Not there. GDA. I like getting the conversations about the Hulk and whatever. See what you're missing out if you're not in member chat? All right, where were we? Damn it. I know we talked about the levels at some point. Wow, we cover a lot of topics. Here's TZA, here's oil. Groups, action, unrealistic, Gilead. Oh, that's an interesting one too. What? Was it earlier? Oh, there you go. Yeah, very tight stops as the market is through. So as we were falling, 17, just over 17.4, 2033, 44.09. I wrote very tight stop as the market is proved bouncy. If you feel like taking a profit was a mistake, just pick a fresh horse. And what does that mean? Let's talk about that. So, see 2030? That was the bottom line over there. Okay, all these. So I made that call at 10:30 about here, and we went a little bit lower, but I was right because that's where we bounced back to. All right, here's 10:30, and here's where we ended up. So we went a little bit lower, but not that much lower. And that's the point of having tight stops, so it's too dangerous, okay? And you know, also when you make $500, as a rule of thumb, $500 on a contract is a lot of money. Okay, on a single contract making $500, that's a nice move. Okay, it doesn't matter. They're kind of proportional generally. You know, you make $250 in an hour or in a couple of hours. What more do you need? I mean, look, I when I did consulting, I would get paid $500 an hour for consulting. And so, but realistically, I don't work every day. You know, you get a job, you get off the job, you get another job, you get what? You know, so on the whole, it's not like I'm steadily making that. So really making, over the course of a year, maybe I'm working half the time, so $250 an hour on the average. So to me, if I make $250 in an hour, that's great. You know, that's what I should make. That's fine. So I'm not greedy. I know that because I know when you make $250 an hour, it certainly adds up to quite a lot of money. So it's not like when I make that on trading stocks, I'm happy. You can't trade stocks thinking, my kid's got to go to college, so if I don't make $25,000 on this trade, it's not enough. That's a terrible thing. That's what bad gamblers do. Bad gamblers try to make huge wins all the time. Good gamblers make small wins. A series of small wins adds up. And it's easy to make a small win. It's hard to make a big win. So when you have a win that's just handed to you like this drop here, and frankly, we've been playing for days trying to get it. We finally got the good drop that we wanted. You got a nice move like that, a nice move like this one's a $1,000 move, nice move like that, a nice move like that, then you're done. Okay, so when it starts bouncing around, you say, okay, I'll get out. Now, what do we mean by fresh horses? So when it goes back to 2035 and 1090 and 4400 and 14450 basically, or 475, you just have to observe the short-term lines, and then you say, well, okay, now I'm going to mark off these lines, and whichever one of these four guys is the last one to fall below the line, like right now it would be the Nasdaq, right? So whichever one is the last one to fall below the line, that's what you call a fresh horse. That's what I'm going to switch to. And in fact, let's do that, okay? Because right now you see the Russell's coming down, 2032, 460. So, oops, let's see while I say it. So let's short the Nasdaq, and I'll show you what I mean. All right? Boom. So now we shorted the Nasdaq. So now you're going to mark your spots. Obviously, I would have rather done it at the time when it was higher, but whatever. So I'm marking my spots. So it was 77, it was 32, and it's 14, and it's 450, I'm going to say. I want to see now progress towards my spots. Otherwise, I should get out of the trade. Like if this green line is holding to the S&P, then this trade might be in trouble, especially because he's going to be down to 4,400 anyway. Okay, when you see first of all, when you see a green line matching up with a psychological support like 4,400, that is going to be one bouncy mother of a line. All right. Now I have a plan for that though, because if this guy starts bouncing up, I'm going to play the Russell up, which is going to be a lot more volatile to the upside than the Nasdaq is. But I'm still watching. See, the S&P is telling me the truth. You also have to do that also. You have to realize the S&P is the most realistic index because it's a big, heavy cap. It's hard to move artificially. You need to know what's going on there. Now, let's take a look. By the way, the Dow is the least reliable, which is why I'm always happy to just kill that box. Here's Apple. Apple's up at 107. That's doing pretty good, all right? Here's the Nikkei. NKD, And they're not doing so good. And then DX is the dollar. And the dollar just got rejected up at 96 something. All right, so the dollar is actually going down, but the market's going down anyway, so it's actually masking a bit of weakness. Now, we entered at 0275, we're at 4404. If we get up to 475, if I add one, then I'm going to be at 375 for an average. All right, and so far, because of the S&P, I think we're just having a very mild bounce. So if we get up to here, I'm going to add another one. So understand, my main premise here is that the S&P is only bouncing off this line, but it's actually going to fall below. And I think that because look at the Russell, it's below, it's a whole, the Russell's down here. The Russell is proportionally at this line. Okay, they started out in the same place, but the Russell's fallen 2 segments down. The S&P has only fallen 1 so far. The Nasdaq has only fallen 1, and the Dow hasn't even fallen 1. Oh, what's oil? Oop, that's one we didn't check. And if oil is below 40, then I'm sure the Dow is going to go lower. And oil is still right on that $40 line. If oil breaks below 40, that's going to be very, very bad for the Dow. Because Exxon, Chevron will drag it down. Oh, and we have shorts on Chevron. I forgot about this. Anyway, all right. Well, I didn't get an opportunity to double down, and already we're back to where we started on the Nasdaq. See, there we go. We failed that line. So now that line, which is 3250, let's say, that's now my stop line. If the S&P goes over, then we're done. And now we're going to watch 75. I want to see 75 fail. I want to see 50 fail here. And if that doesn't happen, then we should probably get out of the trade. So I'm going to keep following it. See, I got my finger on the trigger right now. See where my hand is? My finger is on the mouse button to buy. See, it says instant buy in that little box. I don't know if you can tell. But the little box that's dragging around with my mouse says instant buy on it. And that's because I have that activated so that the second I touch the mouse over there, it's going to make a buy, and that's going to be the end of that trade. Not much of a profit, but still. Because we're just playing right now, just one contract. All right, so 50 is holding so far. 31 is good, though. 75 is holding so far. I still think, now from a look standpoint, it looks like they're going to break, but we'll see what happens. And of course, you always have to be careful because at any given second, some Fed guy could say something and screw you up. You know, you got to be aware of that too. So where did we come in? Oh, we came in at 0275. That's why. We came in not where I wanted to come in. Oh, and I have a plan, right? What's my plan? If this goes down, I'm fine. If it goes up, I might even stick with that contract, but I'm going to want to buy a Russell long to take advantage of a move up back to 80, because I think the Russell might be good for a bounce back to 80 if these guys turn back around. But as long as we're under 3250, I think we're safe for a bear play. So the key for me is 3250 on the Nasdaq, 450 on the Dow. I would want to see break to confirm bearishness, and I want to see 1075 break to confirm bearishness. And it's not happening right now. So frankly, this trade's getting boring. It's probably a good idea to get out of it. All right, so let's go on and answer some more questions. So this trade is boring, so I'm out. All right, oh, $5. I'm happy about $5. We'll try to do better later. All right, but anyway, so the point being that it's not doing what I wanted it to do. These guys aren't breaking down. So, and I have something else to do. I have a webinar to give. So I'm not going to sit there and stare at it for no reason. And of course, it goes down now. But anyway, all right. So back to questions. Otherwise, we'll only answer one question a day if we do it like that. All right. All right. Nedra says, I have June 126 TLT puts. Whoop. Oh, man. What happened? 126 bought them for $3. Is it a good idea to adjust to the bull call spread or play it as a calendar spread? June 126 TLT. I know 128 is our target, so you're actually playing much lower. So, okay, well, first of all, okay, here you go, Andrew. Or, I'm sorry, Norwegian. All right, sorry, it's like, my eyes aren't that great. Text is too small for me on those. Okay, first of all, our target is 128. That's number one. Number two, don't pay premium. I know we did. We did take a position of a put premium because we thought we'd get a faster pullback than we did. That's not going to show us TLT. Where's my things? A startling amount of information in this thing. Copy image, open a new tab. That's what we'll do. There we go. So 128 is our target for TLT. 120 is where it's hit. It's actually staying on this bullish uptrending line. This is the 200 DMA, basically. It's not giving it up yet, but of course you don't expect it to go plowing right through. So we'll see what happens. I was actually after the Fed, I was very encouraged that we stayed down so low. But we didn't break down below this line. So I think it's going to take something else before we get a real down move. So meanwhile, don't be the sucker paying the premium. That's the bottom line. So yeah, of course, your bull call spread is better. And if we go to TLT, go back to your question. June 126 puts. So, and you bought them for 3. Okay, those are the important facts that I need to know. So June 126 puts. Yikes, that's a lot of them. All right, June 126 puts are currently, they're not so bad. Okay, you didn't do too badly. They're 225. So realistically, we think they're going to be 128. But the question is, what can you do with 225 that's going to pay you back at least 75 cents and give you a good upside? So we look at, we're at 129 now. The 135 is 780. And what's $5? The 131. So you could go with the 135, 131 spread, or you can go with a bit of a longer spread, or is it worth being lower? Let's say if we start at 133. Yeah, that's what I would do. All right, so the 133 is 620. See, its last sale is 670, but there's no way it's 670 because you got 615 and 630 here. So you should be able to get those for like 620 at least. So the 133 is 620, and those are the ones you're buying. And the 128s are 310. Again, it's changing so fast that it's screwing this thing up. This is 310. So then what do we say up here? 620 and 310. So it's 310. All right, so the spread here is 310. So you're going to put a little bit of money into it, and then you're in a nice, sensible spread. You're in the 133, 128 spread, and you're not burning premium anymore because you're already in the money by almost $4. And all you need to do is just tick a little bit more further down, and you're going to get $5 back off your net investment. Okay? But that's what you should be in the first place, not open, naked puts. Don't pay premium. When you pay $3 for the 128 puts, you don't break even until it's at 125. What fun is that? All right, we do it sometimes for a quick trade, but it was actually the quick trade that we did take. We forgot to get out of it, so we actually lost our money on that one. We should have gotten out way sooner because it didn't work out. Jal says NG back to 210. Are you kidding me? Frick. Oh, wait. Oh, you mean Dan? Oh, wait. NGN. N6, right? I'm sorry. I'm thinking of K. I'm like, I thought it went up. I was like, what are you, crazy? 210. Yeah, I mean, I like it here. I like it more, too, but I like it here. I have not, I haven't added them officially yet. Not this, actually, I'm sorry. I did, but not on this, in this thing. This is a different portfolio that I just used for the webinar. So, Yeah, I did add 210. So yes, I'm long at 210. I guess you know what the hell? Because otherwise we're going to forget to track it. So I am going to put it. So if we want to go long at 210, which we do, and we'll take NGN6. Actually, I think I can do it right off this chart. Let's see. You go buy single contract, and it's telling me right there. Whoa, 214. What are they, insane? No. What was that? Yikes. What happened to this thing? That's weird. It only worked for a second. Huh. Buy. Single contract. Oh, well, no wonder I never used that thing. It only should just the price. Screw that. Wow. What a ripoff. Never do that. NGN6. Oh, wait. Active trader, sorry. Oh, can't let it out before. NGN6. And right here, so we may as well add. Actually, should I request it here? No. You know what? Here's my logic. They got 54 bidders here, 27 bidders here, only 5 guys here. I think we'll be lucky to get 02. Whoop. Oh, you bastards. That's you guys. Stop it. Sell. Come on, man. I refuse to pay 0.3% more than I was going to. That's just BS. Damn it. Okay. Really, guys, you got to wait for your price. Don't just jump in there and start buying stuff, okay? It will come down. If you leave it alone, it'll come down. If you jump in there and you say, oh, I got to buy it, whatever, that's going to hurt you. All right, so last time I had 10 contracts. I had gone as high as 20. But mostly when I was going 20, it was to just sort of lower the basis and went against it. So somebody mentioned something. I saw there was a comment about the gas. So let me see what it says. Datra says they canceled a $40 billion LNG station project in Australia this morning. What are your thoughts on the implications on the global LNG market? Well, that depends on who did it, okay? $40 billion, holy crap. First of all, that's a positive for us because less gas coming from Australia. That's our competition, right? They shut down a $40 billion export project that was factored into the pricing of global natural gas prices. So that's bullish for U.S. natural gas when somebody else cancels a $40 billion project. That doesn't sound realistic, but $40 billion is a lot of money. I mean, who the hell has $40 billion? Now, the miners are in such deep and terrible trouble that it's possible that there's some spillover. Some project may have gotten canceled because Australia is very messed up. They're not too far from Brazil, actually. Hang on a second. Let me just take a quick look at that on the news. So see if we can figure out who it is that's doing this sort of thing. LNG. Cheniere, LNG supply letters reveal, Cheniere liquefaction. Wow, every other on LNG, if you look up LNG, every other story is going the other way. Like one guy's bullish, one guy's bearish, one guy's bullish. Nobody's in between. Russia under threat from U.S. natural gas. That's another story. All right, that's not helping. How about we put in the words Australia? We can spell it Australia, LNG. Woodside, there you go. I knew it. Wow, $40 billion. So they had a $40 billion naturalization project after the plunge in oil's second largest gas field won't go ahead with the floating development. It completed design work. Well, okay, so now, if they completed design work, that means people thought they were pretty darn serious about it. And more than $400 billion have been delayed since 2014, pushing back things. We've got a glut of LNG at the moment, and a number of potential projects out there. The question for Woodside is, what are they going to do next? All right, so this is basically, look, all these oil companies, they can't afford it. So when you're tied, when you expected the cash flow from your operation to pay for something like this, and now you just don't have the money, you cancel a project. But that's great because it keeps Australia's natural gas landlocked. Not all of it. I'm sure there's other things that are in progress, but some percentage of it. And that's better for us because we're not. We haven't delayed our projects, and we are exporting. And a good part of that reason is because the companies like Cheniere Energy, who are doing the exporting, are not currently in the cycle. They're not current U.S. gas providers. They're not living off the cheap revenues from oil and gas. Don't bother them. They have zero revenues right now, so everything's profit to them as they move online. Oh, silver. Damn it, you're right. Thanks. All right, let's see. Where are we? Oh, okay, so here. So now we execute Plan B, which is go long on the Russell. Because the other guys are starting to move, and we figure the Russell will catch up at some point. All right, he's holding. He held his line. He's holding his line. And the Russell held their line, of course. And what was his name? Oh, natural gas. See how good things come to those who wait? So we're going to go long on natural gas, and I'll start with just one contract. And if it goes lower, I'm thrilled to buy 2. And if it goes lower, I'm thrilled to buy 4. But I'm not going to buy it unless it's going to give me a penny improvement. So I'm buying one at 210. We'll forget that's a little below it. But now, by the way, let's talk about that. That was a good example of the discipline you need to have as a trader, right? I wanted to buy natural gas to 210. It went over 210. I didn't want to buy it, even though it was only 0.04 of a cent. I'm not paying 0.04 more than I want to. I would rather not play. There's no reason to chase things. There's thousands and thousands of things you can trade. Okay, you don't have to chase one thing. So here we are at 210. So now, as a rule of thumb, I don't want to add another one unless I can knock my price down by a penny. So until it's at 208, I'm not really interested in doubling down. But now 208 is here, and really, I guess I would probably add one there. So 208, I think I would do it on the assumption that 2075 holds. And by the way, when I say 208, though, if it's heading down and it looks ugly, I'm not going to buy it at 208. I'm going to wait and see when it stops. All right, but if it's jittery, if it's kind of like jittering like this along the line, then I would pay maybe 208 or whatever. See here where it came to 208 and moved back, I would trigger it there. Even if it was 208.2 and I say, ooh, missed it, whatever. But if it's heading down like this thing, or if it's heading down like this looks, okay, even if this was the 208 line, right, and it's coming down like this, I'm not going to buy it 208. What am I, an idiot? I'm going to wait and see what happens, and then what happened is it went further down, and then I'm going to wait and see what happens. And then when I see this happening, I say, aha, there's my floor. All right? So anyway, so if it comes down to 208, I go to 2. Then I'll have 2 at 207. Now, what does it take to move 207 down another penny? All right? Then it would have to be at 205 just to go down another penny. So that would be 206. But you know what? Then I'm going to start using my line. You see this line here, 204.8? So now I'm going to say I'm waiting until 205 before I do it. So at least I have a support line. Now if I get 2 more 205 off a 207 base, off a 207, I'm sorry, the average would be 208 if I buy one more 207. So if I buy another one at 207, the average is going to be, I'm sorry, if I buy one more 208, the average is 209. Sorry, I mixed up this stupid thing as 97. If it was 210, I go to 208, then I average 209. Then if I buy 2 more at 205, I'm going to average 208. Okay, right, no, this is that right. If I have 209 plus 205 is 14. I'm sorry, I'll average 207. That'll bring me back below this line now on 4 units, okay? This is already my plan. On 4 units, I'll be at 207. Now, if I have 4 207, my next place, I definitely want to be at 205. So I wouldn't buy another thing until 203. All right, so the next time I would take a trade would be down here, 203-ish, or right there. Then I would have 8. So when I buy 1 at 202 at 210, my plan is to have 8 at 205. And if I never get to 205, well, then it was bullish, and that was good that I went bullish. But I don't force it. I'm not jumping on it. Now I just buy it because, first of all, it's a long-term play. These are like July contracts. So sometime between now and July, I expect natural gas prices to go higher. But if they go lower in the meanwhile, it's fine. So again, it goes back to the price. I'm comfortable with this price. I'll be more comfortable if I can get a 205 average. All right, so I'm done with that trade. I don't have to look at this thing anymore. I only have to look at it if it does anything significant, so I'm not going to worry about it. We'll go back to the Dow. Well, actually, what's the dollar doing during all this? Dollar's right on that 96 line. Oil, is it 2:30? No, it's 2 o'clock. PL. Oil is closing in a half hour. It's right at the $40 mark. It looks like it's going to hold that line for the day. And gold, I know what we're talking about, silver, right? We want to go long on silver. All right, now with silver, 15.25 was our mark, and we hit 15.25 on the nose pretty much. We're at 15.27 now, but I'm also good here, so I'm going to buy 1 here in silver, and I absolutely, now, but my average I want is 15.20, what happened? Why did you not execute? There it is. Oh no, now I have 2. That's okay. All right. I thought it didn't execute, so I didn't hear the sound. I have 2 at 15.27. Means I want to get quickly back to 1 if we go up, but that's beside the point. Now, if I want here, I'd like to be at 15.25. That means I want to see 15.22.75 so that I average 50. No wait. Math. I hate math. I want to average 15.25. So this is 2.5 above. So as we have 15.22.5 way down here, that would be the next time I want to buy on this side. So if we get back to 15.225 and I buy 2 more, I'll average 15.225. I'll average 15.25, sorry. So that's my goal on silver. I want to be at 15.25. That's where we were here. Unfortunately, I was gabbing away and I didn't get a chance, even though we actually hit our mark right there. All right, so now we have too many traders. Now we have to worry about silver. We have the natural gas trade on the end contract, and we've got this Russell long that we're just playing with for the short term. So I'm going to get out of the Russell once we see if we have a little rally into the close. But that's my plan here. I also want to go, if we can get back down here, I wouldn't mind going long on. My S&P is still over the line. My Nasdaq is still over the line. And YM. And the Dow is still over its 50 line. All right, so there's no reason the Russell should be so low. And in fact, here it comes down a bit. I'm going to buy another one. I know I said I was going to wait, but I'm going to buy another one. So, all right, there. So I like having 2. I mean, it's too boring. For me, it's too boring to have just 1 contract. It's not even worth it. So I'm going to look for 1080, and if we hit 1080, I'm certainly going to take 1 off the table with a small profit, and then hopefully we can get a peg higher towards the close. All right? Now, so silver, thanks for reminding me, Greg. All right. 15.25 is our new number because it just doesn't go below it anymore. Metals, silver. Okay, so here's the 15.20. See this? Look at that. 15.25, 15.25. You know, you really can't count on hitting 15.20. All right, but if we do hit it, then I'm like I said, at 1522.50, I want to double down. Right now, I'll take it here because it has not been cooperating. It's been extremely resilient down this low. All right, and it's all Fed shock that sent the metals lower. On the whole, though, in fact, here, let's zoom out, days, right? See, on the whole, we're still in a nice uptrend. Oh, the weeks doesn't help. If you look on the days. On the whole, we have a nice uptrend. We came back to this line. We got resistance. Now, what are we going to be looking for? If you want to stay bullish, you want to see a pullback that's no more than half of the previous pullback. So last time we went down to 14. So what we want to do here is hold 15. If we hold 15, that's a very bullish signal. That means that this pullback, we hit the same high. We pull back only half of what we pulled back last time. And if we have a nice quick down stop out, or even if we consolidate at 15, that's going to be looking good for the next leg up. All right, now, TLT, NG. When you see a table pounding, you need to slap the silly and make the trade. My 2 cents. Yeah, well, well, technically, look. First of all, legally, I'm not your financial advisor. I can't really tell you to buy things. I can tell you I think it's a good idea to buy things, but I can't really get in your face and scream buy. It's especially with the new regulations. I mean, what Kramer does is technically illegal now. Nobody's tested the law yet. Nobody's been prosecuted, but you have to be very careful about getting overly enthusiastic about stocks when you're a person in the media or whatever. So, yeah, I mean, everybody's going to have to tone back their language as far as recommendations, I think. So, do you know anything about the junk energy debt held by hedge funds in the U.S.? I mean, what do I know what? I mean, I know there's a lot of it. When rates were going down, energy was considered fairly safe, and so the high-yielding energy notes were considered good places to park cash. And the companies were sure not shy about asking for bonds and such. And who wouldn't? I mean, I'll float a bond for 3%. You want to give me a couple of $1 billion? I'll take it. I'm sure I'll figure out a way to get you a 3%. It's such a scam. You think about it. Anyway, so yeah, I mean, a lot of those notes are going to go into default down the road if oil stays below, below 50. Really, it's going to be a problem. 50 is still not enough for these guys, and I really don't see it going much above 50. Thanks to Shrod. Okay, he had a link too. Whoops, damn it. What are we doing here? Why is this thing so hard to operate? There we go. All right. Savvy says, what studies do you have on your chart? I see pivot, blah, blah, blah. I see pivot points, but everything else trying to set up my chart to duplicate yours. Look, as far as I know, it's just pivot points. These are pivot points. It's the only study I have on Thinkorswim. I think this might be an option and maybe not. It's a high and low something. I don't know what it is because it's always on, so I never really think about it. Oh, look, profit, 160. How's that? Not bad, right? 180? All right, good. Okay, things are looking nice. But now, okay, so we have a little movement here. Now we're being rejected, though. Rejected 130, rejected 235, rejected 17,475, rejected, not really rejected. He's going okay. All right. I was hoping to get to 1080, but we're having trouble, so I'm going to watch it very closely right now and see what happens. Now, of course, you're going to have a small rejection when you hit a significant spot, right? So when you hit a spot that's been a triple top, obviously you're not going to plow through it right away. There's going to be at least a little teeny bit of pullback. Somebody's going to say, okay, that's my exit point, right? That's what pullback is. Somebody's got an exit point marked. They're hoping to get back to a spot and then get out. So I really don't want to see any sort of like, see that? I don't want to see that, 203525. I don't want to see that at all. Ow, we should have taken 180. Look at that, 80 now. 3.4, are you kidding me? If the next ticket down, we're out of this trade. So we got 65, 34, 407. 65, oh, up. 66, come on, baby. Yep, 40725, everybody's going up a little bit. Oh, no, come on. Damn it. Come on, baby, you can do it. Now, ideally, I want to change the screen, so I'm going to look over here. I'll tell you in a second. I'm looking at the news to see if anything happened. No. I'm saying no to everything. It doesn't matter. No. I'm all the way back to 1 o'clock now. No news. No. Oh, no. Sun Edison down another 10%. What a piece of crap. No. UPS low is Seagate. Oh, of course Seagate. Nothing. That was terrible, boring music. All right. So there's nothing going on in particular that's making the market go down. It's just moving of its own accord. And back to taking a look at the dollar then. So I'm trying to figure out like why. I'd like to know why I'm going to get out of this trade before I do. Dollar is, well, obviously the dollar is going to bounce off that line, so that's not a good reason for it to move. Oh, oil. Maybe oil is down. Remember, we're coming into the NYMEX close at 235, and oil is still holding 40, so that's not it. I'm not seeing it. I'm not seeing a reason that I should be getting out of this trade. So if my premise didn't change and the facts didn't change, I'm willing to ride it out a little bit. But here you go. Here, we're back at 120. So lesson learned. We're going to sell one because I have two. So now I've locked. See, now we've locked in a better price, and now I can set my stop at 107,750, and I lock in at least a $20, $30 profit doing that. All right, and see, we're already at 160 for the day. But if we're lucky, we'll get a nice move. If we get up to 180, we'll be up about 200, 250 more, $200 more dollars. So again, now, so you see the point was that I just want to be clear that it's like this is plenty of money to make in like 15 minutes we've been trading it, right? It's not like a big deal. We picked the bottom, we saw some consolidation, we picked the laggiest index, okay, the one that was the furthest behind all the other ones. We waited to get a signal that they were moving higher, and then we jump on board. It's not complicated. And here's $200. Boom, done, $200. 190. All right, that's it. Now I can move on. Now I can go back to work. That was fun. Oops, where are we? So study, the only study there is pivot points on Thinkorswim. You mentioned something about silver. We talked about that. TLT 218 135. I bought a TLT call. Yeah, don't do that. Dollar fleet is when it hits the fan. Contrary-wise, what's going to happen when England leaves the EU? The euro is going to crash, and the dollar is going to go up. Now, that will probably contain rates a bit. Okay, so that might actually push TLT higher at that point. But after that, I still think the dollar is going to top out at 100 where it was before, and we're going to have a sell-off. The question is the timing of the whole thing. All right, but if we don't get a move down, relatively soon that breaks that channel in TLT, then I would be basically wanting to get out of the trade. But I still think it's the right call. It is a tricky thing though. Oh, I'm sorry. What are we left in now with our futures? Let's get back to that. We have a, I forgot where I got out, but whatever. I mean, hopefully we picked the right spot here. See how you got rejected 2035 again? So, you know, it's like fine stuff. So we still have the, oh, I know what we got. We got natural gas, NGN6. Okay, oh, and it's coming down, see? Oh, man, it hit 2075, you bastards. Look at that, it hit my spot. Oh, I should have put the order in. Anyway, so see, I would already be out. See, if it had hit that, we'd have 2, and now we'd be back out of 1, and we'd have a much lower basis. That's why you got to pay attention. You can't just walk away from these things. And what's the other one here? Oh, silver. Love silver. All right, so silver's down. We're at 275. Oh, look at that. We're already up $200 on silver. That's nice. So there's oh, now we're only at 150. But still, I got full faith in this one. We're going to be back up here. It's going to be some good. That's up to estimate $200 because silver is incredibly, with 2 contracts, it's $100 per penny. So every full penny move is $100. All right. So if we go up here from 30 to 40. That's going to be $1,000, $2,000, $3,000. We get back here, it's $4,000. That's nice, huh? So hopefully we'll get a nice move back on silver. Here's Russell coming back. He's getting, once he pops 2035, you can play game on. You can go up on him. And here he goes. In fact, oh, missed it. Oh, there it goes. Okay. So now I have a long S&P. Why? Because 2035 is a really easy line to play. If it goes below it, get out. And it did go below right away, so. Oh, nope, get out. So I took a $25 loss there. So if it had stayed over, that's easy to play. If it doesn't stay over, take a $25 loss and go home. Because look what happens. You make 190 when you're right. You lose 25 when you're wrong. You don't have to be right that often to make some really good money. You got to have that discipline to get out when it doesn't do what you want it to do. All right, what do I care? I don't care if I lost $25. That's not a big deal. That's just a test to see what happens. Like I tell you, a poker trick, in fact. I do that in poker all the time. If you're playing poker with somebody, sometimes I don't mind losing a little bit of money. Like I'll throw, like, you know, if a guy bluffs or you think he's bluffing, and it's going to cost you $50 to find out if he's bluffing or $20 to find out if he's bluffing, don't you want to know? Isn't knowing for sure whether he was bluffing or not worth the money? Because then the next time we play, you've got a better idea how he's playing. See, a lot of people don't realize that. Like, they worry so much about protecting their money that they don't understand that the information they get from spending their money is worthwhile. So we got information now. We got information that 2035 is not. It's not being strong, right? We took it. Now we took a chance because it's tried to get over it, and it kept stopping. So we took a little chance at 2035. It failed. So now we have some general weakness. We're not happy about that. But at least we know. And knowing is important, okay? The more facts you can gather, the better off you're going to be on these trades. Oh, and by the way, if we come back to here, 2032, like if we come back to 203.250, I'd probably want to try another long. If I get back into 203.250, all I got to do is subtract 25 from my profit there, and I know what my basis is. So I have a new basis. Even though I don't actually physically own the contract anymore, I still knock off a point from my basis, so I know where I stand. Here we're back over 203.5, but I'm not going to try it again because I didn't like the way how it acted weak. I'd rather play the Russell over 108.80. That should be better support. So if this is real, then the Russell is going to pop 108.80. If the Russell doesn't pop 108.80, this isn't real. And here's 44.10 we'd be looking for. You want to see that come up? And 44.10, so we're looking for 44.10. He's over. And that means we're back on the Russell trade if we're going to do it. But no, the Russell's failing. So, you know, we don't have that kind of, there's not enough strength there. So the bottom line is we have the silver and we have the natural gas long now. We're going to keep those. And both of those are long-term trades. Although the silver contract, it's not a long-term contract, of course. It's just a basic May future. But silver moves so fast and so violently that you want to just stay on top of it. So you're back to $200 again. I mean, look at this thing. And, you know, keeping in mind that every penny is $50. There's 200 pennies. That's $10,000. There's 200 pennies. That's $10,000. I mean, these are $10,000 moves on silver. They're really crazy stuff. That's just since the fall. 10,000 down, 10,000 up, 5,000 down, 5,000 up. It's a fun thing to play if you have the constitution for it, I guess would be the word. All right. Chevron's Gorgon cost $40 billion in Australia. It's shipped the first LNG this week. Wow, man, they spend a lot of money on these things, don't they? Remember when $1 billion was a lot of money? I don't know. 40. I'm still like, someone says 40 billion. I guess because I'm old. Because somebody says 40 billion to me, I'm like, wow, $40 billion. But even so, I mean, they don't look at Chevron makes. God, they can't make more than $10 billion a quarter, can they? No, they can't. Yeah, and I mean, 2013 was a good year for them. They made $27 billion. So they make, you know, $6-7 billion in a quarter in a good year. Now, last year they lost money. They're negative $3 billion for the year. And in 2014, they only made $20 billion. That's $5 billion a quarter. So $40 billion is a lot of money. It still is a lot of money, even for Chevron. I mean, that's crazy. But it shows you how much projected money is in the natural gas trade. Nobody's spending $40 billion to ship LNG if they think it's going to be $2 a ship. You know, or $2 $2 per whatever, per billion cubic feet. That's, I mean, you know, it's one of many reasons. I mean, you know, you think about the experts and the people they call in and all the money that's put into play and all the investors that get involved to do a project like this, and you think they don't know what they're going to sell the gas for? You think that's less a chance? All right, this is the price of natural gas is one of the wrongest things I've ever seen in my life trading. It should be so much higher than it is now, and it will be higher. I mean, that's why it's our trade of the year. I read it'll be 2 years before LNG's reach 2 BCF a day. That means it will take a while to make the pricing back. Yeah, it's true. 2 years for 2, I don't think it's 2 years for 2, though. I think that's incorrect. I think we have 9 billion cubic feet of day per day is on the map. And I believe, I had a chart for this a couple of months ago. They had all the terminals that are coming online. But of course, they'll have to roll in over the course of 2 or 3 years. But I think we'll probably be, next year, I think we should be halfway there at least. I think we're probably looking 4.5 per day sometime towards the end of next year. I think this year, at the end of the year, we'll be doing 2 BCF per day. That's what I think is going to happen. I mean, LNG was a bit of a delay, but maybe the company LNG, but not all, there's other companies exporting. Exxon, Japan, and partners, and they put up their share of whatever. Oh, there you go. Thank you. Don't make me question myself. No, that's fine. Actually, I mean, I could be totally wrong, so I'm glad you checked. So yeah, that sounds more right. Although I still don't think all 9 will be online. I still think 4.55 at the end of next year is more realistic. But that's exactly what I was counting on. So it doesn't change my premise at all. What's the price target on UNG? I think at the end of this year will be about 250. And I'm being conservative. 250 at the end of this year. $3 by the end of next year. So that's why we have that's up more than 50% from here, and that's why we have a $9 target on UN. I'm sorry, that was my natural gas numbers. On UNG, which is at 6, it's going to move between 6 and 9 over the course of the next 2 years. And yes, there will be some decay, but sometimes that contango thing reverses, and you go into what they call backwardation. So it's not always a negative against you. And over the longer haul, you won't get as much decay as you get in the short run, especially with the incredible volatility we've been getting. Let's see how we're doing. Look at that, 250. All right, that's 190 plus 250. Well, we should count silver, I guess. Wait, oh, that is silver. I don't really want to count the natural gas trade. That's not a short-term thing. Oh, and it's flat ending. Wait. Oh, no, it's good. N6. Got to look at the right contract. What? NG N6, wasn't it? Yeah. All right, I went down 100. See? Teach you a lesson. So we got 250 on silver. We got 190 on the Russell. Oh, minus 25, so I have to keep track of these things. Anyway, so it's not bad, okay? As long as I make you guys a few $100 when we're doing this a webinar, at least I don't feel like I wasted your time. I think that's the key, right? And the natural gas is a long-term play, so it's really not something I'm going to track here. Oh, wait, do we? Oh, yeah, we had one of those before. And 5. So that's $5 on the Nasdaq. See? How much fun is that? All right. What else do I want to do? Well, I want to look at the EIA report. Last thing we're going to do is let's take a look at that EIA report on oil and see what happened. Oh, I love Google. It knows what I want. Some people find that like invasive of your privacy, but I'm like, hey, that's very convenient. Tell Google all your secrets. Crude oil averaged 15.8 million a day. Refineries 88.4% of their capacity. That's not really off that much. This is the time of year they take a little bit of refining capacity offline. But on the other hand, we're refining 19 million barrels a day. All right, so that's times 7 is some big number like 140 or 130, whatever. So it's 19.4 times 7. 135 million barrels of stuff a week is refined. So if 1% of the refining capacity goes offline, that is 1.3 million barrels. All right, so this number, when you see 80, whatever the heck, 88.4, that's down just 1%. There's 1.5 million barrels that didn't get produced. Gasoline production last week decreased from 9.7 million barrels. This will decrease. So in other words, production decreased. That's why we have a build in that's why we have a draw in gasoline and a draw in distillates. It's not demand, it's the production decreased. Demand steady, production decreased. Therefore you have a draw. That's not bullish. Crude oil imports averaged 8.4 million barrels, and that's up, oh my God, up 600 a day. So the build in oil is not so much that the refining capacity changed a lot, it's that for whatever reason we imported an extra 700,000 barrels a day. That's a lot. That's 4 million barrels right there. So half of the build in oil of 8.4 million barrels was caused by a big tick up in imports. Now, could be various reasons for that, and one of those reasons may though be that because the oil was cheap, in other words, because the oil prices are going up, more people took delivery of their contracts for cheap oil. In other words, mostly people roll their contracts over or cancel them before they come due, right? Most of those orders on the NYMEX are fake. I talk about this all the time. But anybody who has an open contract can get delivery. And if you think that oil is going to $50 a barrel and you have contracts at 35, rather than just roll your contracts over, you could take delivery of the oil if you have the wherewithal to store it somewhere, and then you don't have to keep paying the stupid fees to roll over your contracts. And you just wait until they're $50 and you deliver your barrels to somebody else who wants to buy it. So that's easy. In fact, it even lets you, because now you technically, it's like owning a stock, right? Now you own the stock, so now you can sell a call to somebody else, and if it goes up, then you've got the cash from the call in your pocket, and you sell the oil at the higher price. So they do the same thing with stocks of gasoline that we do with stocks of stocks. They utilize it to their advantage, the traders. And again, most of the traders have no capacity whatsoever to take the oil, but there are some that do. There are traders that work for Exxon that can take 10 million barrels of oil if they want to. And this would be a situation where you see the oil price finally starting to go back up, where you say, oh, let's grab 10 million barrels. Maybe United Airlines ordered 10 million barrels. And they said, hey, we've got this whole empty storage facility that we've been waiting for a good time to stock it up. And they say now's a good time to stock it up. Commercial inventories. Okay, so we have 9.4 million barrel build of crude. At 532 million barrels, they're historically high. Historically high this time of year. I think it's only been this high once before, like in the Great Depression. Total motor gasoline inventories decreased by 4.6. Still well above their limits. Distillate, barely any movement. And if you look at the numbers here, can I make this bigger? There you go. So if we look at the numbers here, input to refineries, 15.8, 15.8, no change, okay? Refinery utilization actually went up. So it's not about refinery utilization here. Distillate fuel, everything the same, but for whatever reason, they really dropped their supply down by 500,000 barrels a day. So this is the refinery's choice to cut back on production, and maybe maybe some of them are preparing to go offline. Who knows what they're doing? But they cut back, and that's the only reason there's any kind of draw at all, is because they cut 500,000 barrels a day. Also, our exports are still through the roof. Last year, 1.9 million barrels a day we were exporting. Now we're exporting 2.465. So like another 500,000 barrels a day. 3.5 million barrels a week we're exporting out of the country. That's why inventories decreased 4.6. We're shipping 3.5 million out of the country, which is really a weird situation, right? So we're importing this oil. So we import this oil, but it doesn't say what we're importing exactly. Does it stop in million? Okay, yeah, sorry. We're importing 7.7 million barrels of oil, but then we turn around and export 2.5 million in product. So the fact of the matter is, they always talk about how dependent we are on foreign oil. We don't need more than 5 million barrels from outside sources. And by the way, Canada and Mexico alone provide almost the entire 7 million barrels to us. So we don't, what OPEC does, we could care less what OPEC does, really, in the grand scheme of things. They've lost their power to embargo us or do anything that would bother us at all. Then we've got the capacities here. Notice the product supply. Last year, only 8.7, now 9.3. So gasoline went up substantially from last year. Distillates went down, and other products are flat. So basically, we are making more gasoline. But why are we making more? Because we're exporting it. Look, there's the whole difference, 875 to 937, and there it is right there, 1992 to 2465. We're exporting the gasoline that we're making. It says product supplied. We're not supplying it to Americans. We're supplying it to foreigners, okay? Very, very big distinction. But what does that do? It actually keeps the price of gasoline high for Americans. So what a wonderful idea that we export all this gasoline. So oil, quite a bit lower still. Okay, still from 46 to 39 is $7. So that's almost 20%. And gasoline, well, actually gasoline is about 20% lower. So it's not bad. That's about fair as a ratio. It's a lot more fair than it has been for most of the year. Now, fair means a narrowing of what they call the crack spread. And the crack spread, when they open a barrel of oil, it's a lid, on a barrel, and they crack it to open it up. That's what they call it, crack spread. They crack the barrel. At the point where they crack the barrel of oil, that's when they determine the price of the oil that goes into the refinery. So the crack spread is the price of the oil versus the price of the output refined product that they make from the oil. And that's how the refineries make their money. When this looks fair, that means that the refinery margins, which have been very, very good all year, are slipping because they're coming back in line with where they were last year. So now we go to 323.15. If you want to know how much Valero should be, VLO, you look at Valero, they should not be higher than they were in March of 15, 62.50. Now they're at 65, okay? So basically Valero is a little bit ahead of itself because there's no logical reason that the crack spread is going to be better than it was. Okay, the crack spread began slipping around here, and we remember we were shorting Valero because we thought this was going to happen. It showed up in the first quarter report. They dropped like a rock. Sentiment changed because oil went up, but it really isn't about oil. It's about the spread of the oil to the gasoline. And for a very long time, gasoline came down a lot slower than oil. Then all of a sudden around here, gasoline, around this quarter, gasoline went down further than oil. And that made, oil went down further than gasoline. Sorry. During this time, oil went down here, their crack spread was improving. So when you look back here at this quarter, oil was falling faster than gasoline. Then starting in this quarter, gasoline began falling further than oil. You don't know that, or the traders don't know that. We knew that. But the traders don't realize that's happening until they get the report here, and then suddenly a surprise to them. We knew up here, this is why we made so much money in the butterfly portfolio. We knew up here that was happening. That's why we started shorting Valero. But when it actually was reported, it was such a shock to the traders, it dropped like a rock. And then we went long on Valero. And that, in a nutshell, is why we made so much freaking money in the butterfly portfolio, doing a couple of things like that. Here's the 5% portfolio is up 32% at the moment. The butterfly portfolio, I haven't made the changes yet on it, though, so it's 144%. That is so silly. It's supposed to be a conservative portfolio. You're not supposed to make that kind of money in a conservative portfolio. Short term is, drumroll, 392, down a bit. And the long term is 74.8. Ooh, that's not good. So that's down a bit because we actually had 80 for a little bit. So clearly we need to get a little bit more bearish. We already have talked about making some moves. I'm going to go over those positions. Oh, GTAT, that's right. We got wiped out on GTAT. They reissued, they went through bankruptcy and they extinguished all the stock. So this is dead. That position is dead. So sorry about that. That one just died and ain't coming back. It's dead stock. So we'll kick that out of our portfolio so we don't have to stare at it anymore and move along. All right, but still 74.8% is not terrible. All right, any other questions? Will you be advising that it's okay to buy into the trade of the year UNG? Is it okay to go now? Yeah, it's still pretty cheap. I mean, we just talked about it the other day in chat. We keep doing variations of it on a regular day. I think it was on the morning. It was in the Post the other day, in fact. We had a UNG trade. I like this format of showing us how to make dollars professionally. Okay, good. So a great quote, you can't Google judgment. That is a good quote. Please explain the mechanics of rolling over. Rolling over is just shorthand for you're getting rid of the position you're in and you're moving to a newer position. That's all. That's all rolling is. So mechanics is nothing. If I say you're rolling from the March to the June, the only thing is it's shorthand. It means you're going to sell. If you have a March position, you sell it. Then you open up a June position, and instead of talking about sell this, blah, 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 and sell that, and buy that, blah, 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 you're saying, let's roll it for $5. So that means that you're saying the net of the action is $5. So that's all it is to rolling. So you're buying a thing and selling a thing, and whatever the net is, that's your roll cost. So you're just cutting out all the little silly explanations in between, because if somebody understands that, they know what you mean. All right, but that's all rolling is. There's nothing special about it. There's no special mechanics to it. It's just a term we mean for netting out the trade when you swap one position for another. Oh, oil's not holding 40. Oh, no. Apple. I like Apple. I like Apple, but there's nothing exciting going on with Apple, so it's going to languish between 100 and 110 and have trouble breaking out until they show some better earnings towards the end of the year. Then they'll hit about 120. Other than that, I don't know. So let's see if our prediction was right. So oil, which is CL. Oh no! Ow! Right at the close, huh? So there's an NYMEX close at 235, and right at the close, somebody got the hell out of oil, and that's not good. And that probably is going to reflect poorly on the Dow. Remember, we were thinking that was going to happen. So YM is the Dow. Oh, and it already happened. Look at that. Big drop. All right, so now the question is whether the Dow drags the other guys with it. And who's the most ahead index? The Nasdaq is the most ahead. It's the highest above its line of the three indexes. So if it does keep going down, you want to look at the Nasdaq. But before you short the Nasdaq, you look at Apple to see what they're doing. And Apple's heading down a bit, so that's a good premise for shorting the Nasdaq. All right, so we go back to looking at YM. Oh, no, we should check the dollar. Always check the dollar. DX. And the dollar's not doing anything, so that's okay. So now we go back to the Dow, YM. And we would short the Nasdaq. So we go, bip. Oh, yeah! Curses! It's too slow and I have to teach it. It's so annoying. Bastard! Wow, look at that! What a great trade. See, there's my line. 550. See how my logic was there? I mean, that's the problem is that when you have to go through the steps to explain why I'm doing it, you have to be fast on the futures. That's why it's like people ask me like, why I can't just yell it out when it happens. I'm like, you've got to be faster than the speed of yelling. And by the time I yell it and post it and all that, you see exactly what's happening? I clicked that and it failed to execute. Oh, now it says 2. I'd get rid of that stupid thing. What was the number? Damn it. Oh, look how high that is. So at 0550, I was calling this short. And here we are already, 3 points below already. That's $20 a point on the Nasdaq. That's just, wait. Is that right? $20 a point? Yeah. Right, yeah, 3 points. That's so not a big deal, $60, but still. It's annoying to be right when you don't get a chance to bet it. Well, that's okay, because we wisely got out of our Russells, and they were at 190 on those. And we still have a silver trade running. We still have a natural gas trade running. But basically, it's exactly what we were talking about before. Oil sells off into the close, goes below 40, drags the Dow down with it. Obviously, all the other indexes follow. So, had we been paying attention at that moment, that would be the logic I went through was to say, okay, well, we missed the Dow move. That was the key move we wanted to make. If I missed the Dow move, though, I look at the other indexes and say, well, who hasn't gotten dragged down yet with the Dow? And it was the Nasdaq. So now we're at 4399, so it went through 4400 pretty fast. We'll see, and here's 1075. So now we're getting a test of all those lows again. And we'll see if they hold. But there's no upside catalyst. Why would I want to be bullish? What reason do I want to be bullish? Because oil going down is a fact. It's not changing. Oil went down because there's no reason it should be up. And for all the stuff we were just looking at, there's nothing bullish about that oil report. So you don't just knee-jerk jump back in because facts have changed since before. Before we were saying, well, maybe we'll have a rally into the close, but now something bad happened. Because you know how much this rally has been based on a huge jump in oil. Oil's gone up like 50% in the last month and a half. So this rally in oil has been pushing the entire market back up. So if oil starts heading back down again, the market's going to go down with it. And that, frankly, is one of the reasons we've been so bearish. We expected this to happen. I'm kind of surprised when it didn't happen. So we're watching this. We'll see if 4,400 holds. We could play 107.5. We could play a quickie on the line here. Oh, you bastards. Is it you guys? Are you doing this to me? Come on. That's a little much for a coincidence, right? The second I say it. But if so, you're learning. That's a good thing. That is how fast you need to do these trades. So now I'm looking for the next solid line of support since I missed that one, and I'm going to look at the 4,400 line. And that could be played for a bounce. And the way the Russell's going, it probably is a good play. Everybody's holding their line now. So we'll take that one. There you go. We have one S&P long. And we'll see if we really get a bounce and we're not, or it failed. So now I'm watching 25. I got 25, 30, and 75. If any of them break, got to get out of this trade. Any of them break, get out of the trade. Now we're going lower. I'm still going to take I'm going to take a second one here, though. Oh, wait, what we say, 25, right? Man, this is painful. All right, we'll go one more there. Now we're averaging 3,995. I absolutely want to get out of one here if we get back to it. 25, 30, and 75. Oops, 75 is breaking. So now, with a $60 loss, there's no point in this trade. Oh. Huh. 27, 30. Oh, 75 is back. Oh, look at that. Oh, wait. What we said, we're supposed to get out here, right? One out. All right, so now what have I done? I successfully lowered my basis to 98.50. What did I do, right? I bought another one that lowered my basis on the average, but it doesn't count unless you get out. Then once I get out, though, now I have a nice low basis where here's my break even, right about there. So now I'm watching very carefully, and now my stop, actually, I can have a sell stop right here at 399, and I won't lose money. So now that line I wanted to use to support 4,400, I'm actually below it for a stop with that profit. Now we're back to 4,400. I move my stop up to like 50. Now I can move my stop up to 4,400. Oop, and it's out, so I get out. Oh, no, I'm not getting it. There it goes. See, $10. All right, whatever. Didn't work. Bottom line is it wasn't working, so I get out. But you see what I did? Quickly. I didn't really want to double down, but I doubled down because I thought that I thought by doubling down, any little bounce off of these 3 support lines that I saw here, any little teeny bounce would get me back to even, and that's exactly what it did. And you know what? When a trade isn't going your way, you should be thrilled to get back to even. So if I was going to play long now, I'd be looking to play the Russell over here at 75. Damn it. because it's the best mover to the upside. And also because look how far it is below the line. See, it's 2 greens below and more. These guys are 1 green below. This guy's 1 green below. He's 1 green below. They're all nearly holding their 1 green line. That's what they call support 1, support 2. So these guys are holding support 1. The Russell's way down here. It's just being unfairly beaten up. Don't forget, it was 1100. So as long as these guys are holding, I don't mind playing the Russell long here at 75, but I won't pay 75.8 because I'm already up 190 bucks. Why should I risk anything? All right, you see we're back over 4,400. So generally the premise is good. Everything's holding so far. We so often get a rally into the close that it's kind of a fun thing to play anyway. So I would say I like that trade. Even here, I wouldn't mind it. But these guys have got to hold, and if anybody fails to hold, you got to take that quick loss. That's all. Now, see we're at 76 already. Now, back down, 75.6. Let's see if we can just grab this one last trade if we can. I'd like to make you guys 500 bucks a day if I can do that. See, he's at, remember 25 we're watching there, 30 we're watching here, 00 we're watching here. We're below 00. That's not good. So I'm not as quick on the trigger here if he's below 00. 98.50, 26, 30. Looks like we're going down, folks. Turning ugly. 30.50, 27, under 44. This is how you play the future, though. You got to watch it. You have to have your lines, and you have to be quickly in, quickly out, and that's that. The second something doesn't go your way, out. And that includes when you're in it and you're having a run. You still got to have that same attitude. The second it stops going your way, get out, take the profit off the table. And you can if you sit here. I mean, because this is an hour and a half, right? You can if you sit here. Every hour you can make $100 bucks, $200 bucks, $300 bucks. You know, you just got to catch the right moments when there's a legitimate turn. And especially though, if you're more patient about it, you catch it when there's an actual news story that's moving your market. That's the way you play these things. You know, patiently. All right, so we're going to get off this thing because it's not going. It looks like it actually might go down more likely than up. So I'm not interested in taking the bullish position. So let's see. How much will oil fall from the report? Well, it's the same range that we were talking about the other day. When did I put up that chart? I don't even remember anymore. Let's see. Look for an oil chart. When would I have done that? It'd be nice if you do, Craig, because you're the one I'm talking to when I do the charts. Sorry. I drew a picture. What the hell? Why are you doing this to me? My own site will not let me in. Oh, here you go. Here's how I find my oil comments. I go Control F, Craig. Oops. And then I know where people are talking about oil. All right, so, when was it? It was in the weekend. Damn it. So it was before Monday that I wrote this chart. Oh, wait, did I do it in the post? There it is. That's the chart I made for Craig. All right, this is our trading range. Probable bottom of the spring range. So again, this one's a picture so you can see where it was when I was talking about it. So we were talking about oil in chat, and with Craig, who's asking this question, and at the time he said, what do you think oil is going to do? And I said, I think we're in the middle of the range, and you can't play it here. You certainly can't be bullish because we're in the top half of the range. There's nothing fundamental supporting the move in oil, just rumors there will be supply cuts or production freezes at the OPEC meeting on 4/17. A lot of eggs are into that basket, and we're not bullish on oil in July. We may end up shorting it into the meeting if we're still in the 40s. Okay, so your question, that you're sorry for asking is the same answer I have on Monday's post. It's the same conversation we were having over the weekend. All right, I think that we go down to 37.50. That's why I drew those lines. How do you set? I don't set those things. Okay, those are your pivot points. That's a think or swim function. You can, if you're not a think or swim customer, you can still open up a paper trading account, and you can use those charts. Okay, and then you have to set a study, and the study is called a pivot point study. And I don't set anything. I just choose the pivot point study, and it and that's what it looks like. And you're asking for those for 37.50. I think that's where it belongs. I don't know if it's going to go there, but I think it's where it belongs. The dollar's weak, and that's the only reason that it's not there now. And Cal says, Phil, how do you factor U.S. dollar strength and weakness on the oil price? It's just interesting that I just said that. If the dollar's weak, which it is right now, it's keeping oil higher than it should be. Oil should be at 37.50. I believe it's going to trade in the middle, in the lower end of the range, from 37.50 to 40 into the April meeting. I think there'll be some excitement into the April meeting of OPEC, where oil will go up higher on idiotic rumors that they're going to do something. And then the April meeting will happen, and nothing will really come of it, and it's going to drop like a rock again. And you'll be back down to 37.50 or maybe 35. But for now, we'll probably stay in the 37.50 to 40 range. And no, the Fed doesn't make oil go up or down. And if the Fed hikes, if the Fed hikes, the dollar gets stronger and oil goes down temporarily, but then it finds an equilibrium. It's a short-term effect, the dollar, not a long-term effect. But in the short term, the dollar has been having a pretty big effect because, the dollar in this month, in March. Basically, look what happens in February, from 100 to 95, right? So we've gone down 5%. All right, that's helped oil go higher and higher because the dollar got weaker and weaker. It also helped gold. But gold reversed really fast. What happened to poor gold? That's not a metal. Okay, so gold had a nasty sort of fall here, and silver, we just took advantage of that dip. And on energy stocks, oil has just been sort of up and up while the dollar's been going down and down. It's not proportional, but in any given day, you have an almost direct correlation between the dollar and oil, reverse correlation between dollar and oil. After the days, though, it only sort of like gives you weakness or strength. So currently the dollar is very weak, and that makes gold very strong. If the dollar starts getting strong again, oil is going to start getting weak again. But also the fundamentals for oil are nothing. The fundamentals are terrible. They don't support this at all. Why the hell would oil be 50% higher than it was? There's nothing supporting that, nothing at all. There's nothing. Demand there'd have to be drastic changes in the demand. We ran the numbers. Didn't we do this here last week? We ran the numbers on the oil inventories, and we average a build of 3 million barrels every single week. We've been doing that for the last year. So 150 million extra barrels were put into inventory since last year. That's 3 million barrels every single week too much oil. So that's out of 19, that's out of production of 19 times 7, whatever that works out to. 19 times 7 is 133. So 3 into 133 is like 2.5%. There's 2.5% too much oil. So something pretty drastic has to happen to knock down 3 million barrels a day out of production. And that has not happened yet. And so what the hell would make oil go up 50%? The rumor that they might cut production down the road? And they're not saying they're going to cut production. They're saying they're going to maintain production at this level. And then you got to hope demand goes up. And we've already had conversations endlessly about why demand is not going up. So that's where we stand. All right, guys, way too long. Can't have 2-hour meetings. The machine blows up and nobody's going to be able to hear the recording. All right, so that's it for today, and we can pick this conversation back up next week. Thanks for coming. All right, have a good day, everybody.